On a February evening in 2025, a business owner in Las Vegas, Nevada, was grabbed off the street. He wasn't robbed. Nobody wanted his wallet. The men who took him wanted him to make one phone call, to tell the federal government one specific lie, that $26 million missing from his company wasn't stolen, that it was a gift. To understand why a group of men decided kidnapping was their best option, we have to go back 7 years. Back to the day a small construction company hired the woman who would almost take it apart from the inside. Who is she? How much did she actually take? And how does a paperwork crime end with a man being dragged off a sidewalk? Let's start at the beginning. Gilmore Construction is not a Fortune 500 company. It's a Las Vegas-based construction business, the kind that exists in almost every American city, built by one person, grown over years, employing people who depend on it for their paychecks every 2 weeks. At the head of it is Larry Gilmore. He built this company. He hired the crews, signed the contracts, and did what almost every small business owner eventually has to do. He handed the money over to someone he trusted so he could focus on running the business itself. That someone was Cynthia Marabella. Marabella held the title of controller. If you've never worked in a business like this, understand what that title actually means. She wasn't answering phones. She wasn't in the field. She was the financial nervous system of the company. She managed accounts payable and accounts receivable. She was the one who saw every bank statement, every credit card bill, every dollar that came in and every dollar that went out. In a lot of small and mid-sized companies, this is the least glamorous, least watched job in the building. Nobody throws a parade for the controller. Nobody double-checks her math, because that's the entire point of hiring a controller. So the owner doesn't have to. At home, Marabella had a boyfriend named William Costa. Costa ran his own business too, a security company. Sit with that for a second because it matters later. A man in the business of protecting things was about to spend 7 years helping the woman he loved take something that wasn't hers. Nobody at Gilmore Construction had any reason for alarm. The company was doing well. Projects were getting built. Payroll went out on time. From the outside, everything about this business looked exactly like it was supposed to. But sometime in that first year, 2018, something small happened. A bonus check, the kind that gets cut for an employee doing good work, got duplicated. One check became 2. The second one didn't go where it was supposed to go. Nobody noticed. Why would they? It was one check. It looked like an accident if anyone had even looked at all. They wouldn't look again, not really, for 7 years. Here's the thing about a controller stealing from her own employer. The theft and the cover-up are the same skill set. The job that gave Marabella access to the money is the exact same job that let her make the theft invisible. It started, as we said, with duplicating bonus checks. Copy a legitimate check the company was already planning to write, deposit the copy into an account she and Costa controlled, and move on. Low risk. Easy to write off as a clerical error if anyone had caught it early. Nobody did. Once that worked, the scheme grew a second layer. Marabella and Costa began opening credit cards, not in their own names, but in the names of other people. They ran up charges on those cards. Then, using the stolen money, they quietly paid the balances off. It's a small but important detail because it means this wasn't just theft anymore. It was theft with a built-in laundering step, one layer removed from her own name, one layer harder to trace. Then came the fake vendors. This is the point where a scheme like this stops being opportunistic and starts being a system. A controller who wants to steal seriously doesn't just take money, she invents a business to take it from. A name, an invoice template, a merchant account that exists only on paper, that never answers a phone, that never delivers a single truckload of materials, but that Gilmore Construction pays anyway, because the invoice looks exactly like every other invoice crossing Marabella's desk. And to keep the whole structure standing, she did the one thing that made all of it survivable. She faked the paperwork behind the paperwork, forged bank statements, falsified accounting records, fabricated merchant statements that made the company's books balance on paper, even while the real bank accounts were being quietly drained. If Larry Gilmore had ever pulled the file and glanced at it, everything would have looked fine. That was the entire design. So where did the money go? Marabella and Costa didn't hide it in a storage unit. They spent it, loudly. They lived in mansions. They drove luxury cars. They paid private school tuition. This is one of the strange, consistent truths about embezzlement cases like this one. The evidence is often not hidden at all. It's parked in the driveway. It's dropping kids off at school. For 7 years, the biggest clue to this entire scheme was sitting in plain sight, and nobody who saw it had any reason to ask where it came from. But even mansions and luxury cars weren't enough. There's a twist here that makes this case stand out from a typical embezzlement story. Marabella and Costa bought expensive merchandise with the stolen money: designer purses, shoes, clothing, jewelry. Then Marabella turned around and resold that merchandise through an online consignment company. Think about what that step actually accomplishes. Stolen money buys a designer handbag. The handbag gets listed online, sold to a stranger who has no idea where it came from, and the payment lands back in an account looking exactly like what it's supposed to look like. Ordinary income from an ordinary online sale. Dirty money goes in one end of that transaction, and clean money comes out the other. It's laundering, dressed up as a side hustle. Over time, that resale pipeline alone brought in more than $245,000. By the time anyone found out what had actually happened here, this wasn't a scheme you could measure in thousands of dollars. It wasn't even hundreds of thousands. This was a scheme measured in years, 7 of them, start to finish. And by the end, the number involved would be almost impossible to picture. We'll get to that number. But first, someone had to notice. Investigations like this one don't start with a dramatic tip or a smoking gun. They start quietly, months before the person being investigated has any idea. Sometime in 2024, IRS Criminal Investigation and the Henderson Police Department began looking into Gilmore Construction's finances. This is slow, grinding work. Forensic accountants combing through years of bank records, credit card statements, and invoices, looking for the seams in a story that was built specifically to not have any. It takes patience. It takes the kind of attention to detail that a controller spends years betting nobody will ever apply to her own work. They found the seams. And when they added it all up across 7 years, from January of 2018 to February of 2025, the total came to more than $26 million. $26 million, taken from one company, by one employee her boss trusted enough to hand her the keys to everything. At some point in that investigation, federal agents did something that changes everything about this story. They told Larry Gilmore what his own controller had done to him. Imagine that conversation. 7 years of trusting someone with your life's work, undone in a single sitting across a table from federal investigators. And then, within a short window of time, the story stopped being a financial crime story altogether. In February of 2025, William Costa, the boyfriend, the security company owner, the man whose entire business was supposedly built around protecting people, helped orchestrate the kidnapping of Larry Gilmore. This wasn't a random act of desperation. It had a purpose. Costa and the other men involved wanted Gilmore to do one specific thing: tell the IRS that the $26 million wasn't stolen at all, that it was a gift or an investment, anything but the truth. Gilmore didn't do it. He got free, and he went to the police. Costa was arrested the very next day. Sit with the scale of that decision for a second. Marabella and Costa were already facing a fraud investigation. Serious but survivable. The kind of case that ends in restitution and a defense attorney's best argument for leniency. Instead, Costa made a choice that turned a white-collar case into a violent felony. He didn't just risk prison for fraud anymore, he guaranteed it. Now we can answer every question this story opened with. William Costa was charged, first, for the kidnapping itself. In February of 2026, he pleaded guilty to first-degree kidnapping and extortion. Separately, Costa also pleaded guilty to wire fraud and to monetary transactions in criminally derived property. The charges tied directly to the $26 million embezzlement scheme itself. Between the fraud and the kidnapping, Costa is facing up to 30 years in prison. His sentencing on the fraud counts is set for September 2nd, 2026. Cynthia Marabella pleaded guilty in April of 2026 to one count of wire fraud and one count of monetary transactions in criminally derived property. In July, a federal judge sentenced her to 5 years and 10 months in prison, followed by 3 years of supervised release. She was also ordered to repay the full $26 million she took. Here's where this story lands, and here's the moment that matters most if you're the kind of person who wonders how these things actually fall apart. Marabella didn't have to end up here. 7 years of quiet, patient fraud, checks, credit cards, fake vendors, forged statements, is the kind of scheme that, when it finally gets caught, usually ends in a plea deal, a restitution order, and a sentence a defense attorney can argue down. Ugly, expensive, career-ending, but survivable. The one thing that changed everything wasn't the theft. It was the decision that came after. When the walls started closing in, instead of letting the case play out as a financial crime, Costa escalated it into a kidnapping. That single decision is the line this story can't walk back. You can explain away a forged invoice. You cannot explain away dragging a man off the street to threaten him into lying to federal investigators. If there's a single moment where this scheme stopped being something survivable and became something neither of them could undo, that's it. This case is dramatic. A kidnapping, $26 million, mansions bought with stolen money. But the mechanics underneath it are disturbingly ordinary. According to the Association of Certified Fraud Examiners, embezzlement and cash theft make up 90% of workplace fraud cases, with an average loss of more than $1.4 million. The median scheme runs for a full year before anyone catches it, and often it's not an audit or a bank flag that catches it. It's a tip from another employee. The Comptroller's Council has looked at who commits fraud like this, and the single biggest warning sign, showing up in 41% of cases, is exactly what played out here. Living far beyond their means. Mansions, luxury cars, private school tuition. It's not hidden. It's often the most visible thing about the person doing it, because the people closest to the money are usually the last people anyone thinks to watch. That's the pattern this channel keeps coming back to. Trust gets extended to the person holding the checkbook because handing off that trust is the entire point of hiring them. Oversight quietly disappears because everything on paper looks fine. And somewhere in there, a person convinced themselves they were owed this, right up until the day a federal investigator sat their boss down and told him the truth. If this is the kind of story you want more of, subscribe, and I'll see you in the next one. If you like digging into how this one fell apart, hit subscribe. New cases like this go up every week. Drop a comment with a case you want covered next. Thanks for watching.